Welcome to the Aul Financial Hour Podcast with Steve Aul. There's a lot of optimism on Wall Street, Steve, after the beginning of April saw that big fall, right, with all the talk of the tariffs. We don't even know where this tariff thing's going to end up because one appeals court says this, another one says that. Eventually, it's going to go to the Supreme Court. But we looked at some market history because it has been a great run in the market lately. And honestly, looking at it, Steve, I'm more confused than ever because in years where the S&P 500 hit at least 50 record highs, which it did last year, the median return the next year was down 6%. Here's another one. 75 years ago, 1950, the market had 2 years of 20% returns in a row, 8 times since 1950. In 6 of those occasions, the market was up 12 to 13% the next year. Okay, so that's good. So we have one bad, one good in history, and then a meh, which is if you look at the S&P the year after an election since 1980, the average return is only about 1.5%. So basically, I could use one stat, Steve, in any direction to go down, up, or flat. If history can't give me a definitive read on this, can you help us out?
Well, that's where, you have to look at it. In one of my conference rooms, I have it's a little glass globe. And when people ask that simple question, what's the market going to do this year? A lot of times I'll just pull that little globe up and say, my crystal ball's got a flat spot on it.
Oh.
My crystal ball's got a flat spot on it. So I really don't know which way the market's going to go this year. Up, down, stay the same. It's about the only guarantee compliance will let me actually give. We don't know. But the idea that I have to look at it, is your plan designed for whatever happens in the market? Because I believe my job is more than just an investment advisor. The market's going to do this, the market's going to do that. I think investment advice is part of a good retirement plan. And what should that retirement plan include? Tax strategies. We were always told we're going to be in a lower tax bracket in retirement. That might not be true today. Some people it will be, but many it won't. So we have to look at tax strategies. And I look at a strategy for taxes in a slightly different light. As an accountant, when I used to look at taxes, it was about what can I do this year to reduce my taxes? Now I have to look at the big picture. How is this going to affect myself and my estate over time? If I don't pay any taxes now, but somebody has to pay a large amount of taxes later, is that good? I don't know. We have to weigh that out. And I think a tax strategy is very important. I think the question most people out there have, Steve, how am I going to replace my paycheck when I retire?
Right.
Income generation, because I'll get a lot of it. My guy doesn't talk about that. He said, just don't worry about it. We'll make enough money and we'll just pull some out of your account. I don't think that's an income generation plan. And I think having an income plan is very, very, very important. Social Security, the optimization of Social Security. As a single person, it's not as difficult. We can look at your longevity. Because if 80s, 81's kind of the break even, the longer that you live, the more you delay, that would be better. But you can't do it in a vacuum. We have to look at your other assets to make sure you can delay. Married couples. I think the thing that most people miss when they plan for their own retirement and Social Security is, what's the survivor benefit? When one of the two of us pass away, what is going to happen to the other spouse? And I think that's very, very important to look at. Long-term care. Do I have it covered? Everybody out there has a long-term care plan. And I know a couple of y'all said, I don't have a long-term care plan. I'm going to say, yeah, you got the same one my parents do. What asset are we going to sell to keep Mama in the nursing home when she got sick about 15 years ago? Well, my parents were sold products. That's why I look at planning. And then we also look at legacy. Most of us didn't plan on leaving a legacy to our children, but because we did what we were told to do, we saved for our own retirement. We spent less in those early years so that we could live the way we want to do it in our later years. And now we'll probably pass on those assets to our children. So we look at it and say, how can I best pass that asset on to my kids? So I think that's what we have to look for. What's markets up, down, where's it go? So I look at it, if your plan is not designed for whatever happens in the market, Call now. Ask for that comprehensive retirement plan because retirement is a lot more than just investments. Give us a call. Allow my team to assist you.
A lot of you are planning a 1 week or 2 week or something vacation this summer, all right? Certainly need a plan for 15, 20, 30 plus years of your life and retirement. You need the plan. Get in touch with Steve Aul and the team at Aul Financial Group, 636-230-8824, 636-230-8824. Or go to yourmoneymattersstl.com and get in touch with the team. Get on the calendar and just see. Maybe you just need a second look at the plan you already have. And while we're talking about it, Steve, because you said that dirty T word several times in that bit there where you're talking about the different pillars that Aul Financial Group covers, you have a taxes and retirement in office educational seminar coming up here toward the end of the month.
Yes, June 24th at the office. It starts at 6 o'clock. You have to make a reservation. Please call Chris, our consultation coordinator, and let him know that you would like to come. Please bring a guest. Come with somebody. Bring somebody with us. Sit down. I love the opportunity to meet new people here at the office. So just give us a call. 6 o'clock lasts about an hour and 10 minutes. So it's not going to keep you there all night long. Give us a call. We're going to talk about a lot of the things that have happened in the past and some of the things that are presented now, how I react to that and what I think is going to happen with some of the things that were presented a couple weeks ago in the Big Beautiful Bill. Nobody
made a better entrance on a TV show than Norm Peterson on Cheers.
Afternoon, everybody.
Norman?
Hey, what's happening, Norm?
Well, it's a dog-eat-dog world, Sammy, and I'm wearing milk-bone underwear.
We could just end it right there, couldn't we? That's hilarious, all right? A dog-eat-dog world, and he just wear milk-bone underwear. Well, the financial industry, Steve, also has some classic lines, not just, hey, Norm, right? So maybe some of those might be, you'll pay fewer taxes in retirement, or don't tap into your 401k until the government says to, things like that. What are some common pieces of retirement misinformation that you've had customers or people roll into Aul Financial Group with, Steve, and you've had to combat?
I think the biggest ones that we have to look at is you're going to be in a lower tax bracket in retirement. You know, because that was the promise they made us back in the late 70s when the 401ks and the IRAs came into play. Take this money now. We're going to give you a tax deduction for it. And it's going to grow up tax deferred.
Right.
Then when you get over 59 and a half, you can take money out. It's going to be taxed at that point as ordinary income. But you're going to be in a lower tax bracket, you know. And they also said 70 and a half, you have to take required minimum distributions. And when you pass away, your kids can stretch it over their lifetime. And we look at how many of those are not true today. You know, I do presentations, you know, a couple times, 3 to 4 times a month. I ask the one question almost every time. How many people in the room are retired? And a large number of people actually raise their hand. And then I'll say, okay, how many of you that are already retired are actually in a lower tax bracket? A lot less hands than those that are retired.
Yeah.
A lot less hands. And then I ask the question, have you thought about when required minimum distributions kick in? Or what if you lose a spouse? Those single brackets are a lot lower to start those higher tax brackets. So a lot of people, I mean, we just don't think about taxes. So I think that's probably the biggest one. And that's why I do the taxes and retirements. We got one coming up in June 24th here at the office so that people have the opportunity to sit down and go, well, how are taxes going to affect me in retirement? The other one that I hear a lot, you're going to spend less in retirement. And I'm sitting there going, okay, you've developed a lifestyle. You have after-tax money. You've given money to your 401k. You're paid for your insurance. You did all these things. And then you had the net amount of your paycheck. And that's what you're living on.
Yeah.
What makes you think the day you retire, you're going to spend less than that? As I always like to tell people as they're getting in that retirement, we meet them 4 to 5 years before, kind of help them possibly rearrange the way they're saving for retirement. Then they're getting ready to retire. And my experience says those first 2 to 3 years of retirement can be very expensive. Why? Every day Saturday. I quit working so I could spend more time traveling. I quit working because my kids are in a different area and I want to go see my kids. I want to travel. Those things cost more money. So it's very seldom do I actually see somebody that says, I'm going to retire on this, and then they cut their expenditure money down immediately. Now, a couple years later, if we got enough pillow, they'll usually get back into line. But I always warn them that that's going to happen. And I think that's important for somebody to help walk somebody through that. Inflation is almost never figured in a do-it-yourself retirement plan. I don't have to worry about inflation.
My goodness.
And I'm going, yeah, you do. They said, why? I said, because right now at 60, if you're spending, I don't care if it's $5,000, $10,000, 20 years from now, you're going to be spending $10,000 to $20,000. And they look at me and say, Steve, there's no way I'll ever spend $20,000 in a month. I said, did you ever think you were going to be spending 10?
Yeah.
No, we didn't. Inflation is going to kick it in. And I think another big one is that Social Security and Medicare are basically going to cover my expenses.
Oh.
And my insurance. And that is not a true statement. So those are the things that I look at that are those major ones. Taxes, Medicare, Social Security. I'm going to spend less. The other one, I'd never buy an annuity. And I look at it to the point, I don't dislike annuities. I hate annuity salespeople. Give me the right tool for the right job, and I think annuities can have a very, very, very good place within a plan. But I get to see it a lot of times when people have annuities that they, quote, didn't need, didn't want, or don't understand. So retirement is not a destination. It's a journey.
People nearing retirement, Steve, are liking that idea of guaranteed income. You can help work this and work through what they know about annuities. And annuity sales continue to set records, in fact. But among the skeptics are those who worry about losing their principal investment. Is there really a concern with annuities? Are some riskier than others there, Steve?
Not all annuities are the same. That's about the easiest way to put it. They've changed a lot, since the Roman Empire, because that's kind of when they came into effect. The variable annuities came in the 50s, and the more of the fixed annuities came in the 80s, the fixed index in the 90s. So there's a completely different group of things for annuities. And to me, I always like to ask, because I know somebody grew horns as soon as I said annuities, because they got a horror story.
Yeah.
That somebody told them Uncle Joe bought an annuity and, he died 4 months later and the insurance company kept his money. That's like saying that I bought a car in 1972 and therefore my first car was a Ford Mustang II. It was the worst color of green that you could ever say. So I could look back and say, I'd never own a Ford Mustang. I just bought a bad Ford Mustang, so we'll just kind of put it that way. So we look at it, the right tool for the right job. And that's when I look at it. If there's a gap between the amount of what your living expenses are and how much fixed income you have, Social Security's, pensions, rents, whatever you have, if there's a gap between those, filling that gap with guaranteed income could be the greatest thing you could do, because you might live a lot longer than you think you're going to live. So that's a guaranteed income annuity. And then we got the kinds that pay a fixed rate for a fixed period of time. A fixed annuity. Sounds a lot like a CD. CDs are guaranteed by FDIC. Fixed annuities are guaranteed by the insurance company. And then we have asset protection. There are people out there that would love to participate in the market, the returns of the market, but they don't want the risk of the market. And that's where a fixed indexed annuity comes into play. Your money's not invested in the market, but the index it's tied to can be in the market. So I look at it to the point where, what do you need? Do you need income to fill a gap? Or are you just looking for asset protection? You'd like to participate a little bit more in the market if the market does go up, but you don't want to participate if it goes down.
Thanks for listening to the Aul Financial Hour Podcast. Insurance products are offered through the insurance business Aul Insurance Group, LLC, AIG. Aul Financial Group, LLC is an investment advisory practice that offers products and services through Impact Partnership Wealth, LLC, IPW, a registered investment advisor. IPW does not offer insurance products. The insurance products offered by Aul Insurance Group, LLC, AIG are not subject to investment advisor requirements. IPW and Aul Insurance Group, LLC, AIG are not affiliated companies. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. Aul Financial Group, LLC is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Aul Financial Group, LLC.
This radio show is intended for information purposes only.